cut off there because I blabbed too much and the recorder probably conked out, which is fine. Anyways, where I was going with this, I'm going to wrap it up pretty soon. This video, yeah, you be on Seeking Alpha. A couple things, as I said, takeaways: no intraday, only investing. Get involved with really good traders. Read the comments because there's some really good comments in there showing you how to analyze things that you never thought of. And these are pretty well, I would think, pro level investors and probably pretty successful based upon what I'm reading in the comments. Hopefully, you've gotten lessons learned based around gold, real estate market as it stands right now, especially the REIT market space, gold, crypto, and how you can trade gold in crypto and reduce all those problems of gold, but get all the benefits of gold. And yeah, Seeking Alpha is really good. And yeah, that's where it's at. It really changes your mindset once you go from the intraday, high speed trading, scalping kind of mindset, or swing trading, and going into long term investing, multi day holds. So we're going to end it there. Let's see. All right. So I know, I don't know if people actually get to the end of the video, whatever. But in here, I've got my quantlabs.net/books. Obviously, it's to entice you into my email list. I'm pretty passionate about this stuff, but you got to make a living by selling stuff online. But thankfully, I think with Seeking Alpha, that's kind of supplementing what I'm not making, as I said earlier in the video. So yeah, go to quantlabs.net/books to get on my email list. I do have a store at quantlabs.shop if you want to see what I do, but usually I'll let people know as well. And we'll leave it at that. Okay. Yeah, it's amazing how, from my point of view, the shift has radically changed in the world of from trading to investing, reducing commission, and all that stuff. All right, so I'll say thanks for watching. Very long video. I don't usually do these. I'm not doing as many videos. I'm just doing this because it's late Saturday night, and here we are blabbing to a computer and getting it up on YouTube and wherever else. We'll leave it at that. Thanks for watching. And if you got comments, comment away in the video. Or if you see one of my articles, let me know if you are coming from the world of, let's say, YouTube or social media, or my email list, so I kind of can identify. Or I'm going to assume you're from within the realm of Seeking Alpha. And there's a lot of good people on there. And if they're seeing this video, I got to say, man, best community out there for trading, investing, and I'm really excited to be part of it. I've only been kind of more serious in August. As I highlighted, the last 2-3 weeks, I'm banging out some stuff. So before I end, my shift is going to change. I've written some Python scripts. My latest one I just wrote last night will take, basically the process is this, and I'm purposely stating this new one at the end of the video because people that watch to the end will get rewarded by hearing this. So what I've done is I've gone from developing tear sheets in certain ETF sectors. There's about 60 I've identified and segregated out. And as I said earlier, only about 10% are profitable. Some are long and bearish. Sorry, long and bullish, or there's other ones that are bearish and shorting with and without leverage. So out of that, you can see some amazing data that most people won't see. So in my case, that's why I say gold is negative, real estate's looking negative, and that's where I get that knowledge, and that's where the articles come from. So that is script number one that started me here. When I go on to Seeking Alpha and I learn about that outline I mentioned, I have the ability to show and build out a script that will download data, build a chart, build a table from the source that it gets from, and then it will basically pre-build, like build as a template a Word document that I can use with tables and charts, and in there I gotta describe the verbiage of each table and each chart, and then out of that I edit it before I submit to Seeking Alpha. Okay, so those work, and those are the ones I showed you otherwise. And then a new one I just did is, um, I want to get paid on Seeking Alpha. I want to get the big money, the max, which maybe you don't know, $60 US per article. But those articles, from what I understand, are from stocks that are not loved, and nobody's written about those stocks for 60 days. Okay, so let me put this in full. So for 60 days, they're not touched. So out of that pays $60, there's about 2,300 of them, and they have a full list that you can download from Seeking Alpha. So I go through it, turn it into a spreadsheet, and then you go, whoa, 2,300 stocks that are not getting covered on Seeking Alpha. So what I did was, knowing what the hot sectors are, which are, in my case, are oil, well, I'll say energy, oil, U.S. infrastructure, U.S. oil infrastructure, and maybe natural gas. And I'm also seeing gas. Natural gas is coming back again. So with that, I'm able to say, okay, here's the unloved stocks out of 2,000, and only choose the ones that are in those hot sectors. So I did that yesterday. So that brought it down to about 250 to 350 stocks. So I built a script. What it does is it will go through that list, and it'll go out to Yahoo Finance, download the data, and it'll generate a 5-day, which is a week, a 20-day, which is a month, as well as 240-day, which is a full year. And it will do a rate of return on all those periods for the stock price each day. So I'm able to get a ranking out of those 250 to 350 stocks, which perform based upon price performance over 5-day, 20-day, or 240-day period. Okay, and I can rank them like factoring. So what I did was I did that, and then I'm able to get winners out of those 250 in the sectors that I think are hot. So I went through it. There's 2, maybe 3 stocks that are very hot. And then when I'm saying hot, that have little, like, they're small stocks, like $5, $10. But these are not the garbage penny stocks. These seem legit companies that are just not getting coverage, and nobody's talking about them. Yet the price is doubling. All right, so now I know these companies. So now I have the ability, as I said earlier, with a script that will go out and generate all the charts, all the tables for me from the same data sources, and I can build a story and build an article now for those winning stocks, right? And they're pretty strong fundamentals, really strong. I can't ever forecast how far it will go, but one was a solar company, looked pretty good, out of Minnesota. The other one was an oil shipping tanker company out of Ireland, and that one's red hot right now, like really strong. So I'm going to write articles about it. And again, I can't take positions on those stocks if I'm going to submit them to Seeking Alpha. Okay, but what I will do is I will submit those articles to Seeking Alpha, because I get paid, $60 US, which isn't bad. And on top of that, most of them I'll say strong buy, and they got the fundamentals and the charts and performance, and they're legit companies from what I'm seeing. And if I put a strong buy on them, which they may be, or at least a buy, they get the attention of the pro level folks at Seeking Alpha. When you start getting the attention of the pro level folks, they go, wow, this contributor is really talking about his stuff. So then that means that Seeking Alpha values that as well. Because if I'm able, Seeking Alpha will measure you based around who's reading your article. Majority of them will be the free folks that are not part of or paying into Seeking Alpha. Obviously, Seeking Alpha want articles from contributors that will get the attention of premium and pro level folks, the paying folks. So the last article that I put out there that got a lot of attention and up until this morning was getting about 50% attention from the pro and the premium folks. So if I'm able to put out those kind of articles that get attention from pro and premium, that means that my content or the articles I post into Seeking Alpha become valuable for hopefully the pro level folks. And I'll tell you, when you look at these two stocks that I'm planning to write on, there are 4 people in Wall Street that put them as strong buy. How many Seeking Alpha contributors are saying the same? Strong buy. 0. Nobody's talking about it because no one's covering it. But if I got the software now, if I have the software now that comes out and says, yeah, these are strong buys, I'm going to write about them and put them up on Seeking Alpha. And hopefully the strategy will be they get the attention of the high-end Seeking Alpha pro level folks. If that's the case, then that means I got something of value, right? So as you know, here I'll go back to the browser. As you know, and I'm only saying this because I'm just thinking as I speak. So in here, I've got my Quant Labs shop. Okay, so if you're right at the end, this is I've been pushing this. I have a secret, well, not really secret. I have this. I'll put this in the description. Okay, I have a monthly service. Okay, you go there. I'll put this in the video link in here. These are the tear sheets I can develop, right? And they're very useful. That's what the pro level folks, the Wall Street, the hedge fund folks are going to look at. All their stats are right there. Exactly what they look for when they want to look for a a stock. I can generate those on the fly against something else like the S&P 500 as a standard benchmark. You can compare stock against the benchmark. So I can do that. On top of, I can generate the articles on the fly and have the analysis now to know which ones of those stocks are doing really well. So in this membership, I charge peanuts. Frickin' nuts. Right here. Used to be 47 until last week. I just raised it 50% per month. You join it, you'll be grandfathered in. This is the price I want to get up to eventually at $127 per month. Okay? So what I'm saying is if I'm able to generate videos like this, or the one I just put up on Rumble about Pfizer and Moderna, the big no-nos, at least on YouTube, let me go to my quant hyphen labs net. So medicine pushers. It's obviously to avoid the bad word. These stocks, and I do a deep stock analysis. I don't know how long that video is for, but it's only on Rumble, not on YouTube, because YouTube won't like it. So I did that as a sample of these scripts that I've got. And then this right here that you're looking at is the tables and charts before I do the verbiage to generate the article. Okay. And then edit it up and then send it off to Seeking Alpha. Okay. So my most recent step I just did, as I said, will now start to go after the little winners. And they're doing pretty good. There's certain stocks I can pick for Seeking Alpha, play by their rules, and not put positions on them, and in order to stay truthful with Seeking Alpha. But I can definitely maybe do another stock and do the same analysis by video and put it behind my paywall behind that service on those winners. So that's what I plan to do. And another way you can get around that is if I'm gonna submit, let's say, I don't know, as an example, a hot one like or was hot was let me pull up finance Yahoo. If I do, let's say, Exxon, right? Exxon at the time when it was hot. Let's say, yeah, right here. So long here, and boom, 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 and then it's gone flat. It could go up, but it could be the peak. And by the look of it, it's already hit the peak. But I do an article on that, and I know that stock is that sector, oil, energy sector, especially U.S., is hot. I could easily do Chevron and put positions on Chevron. Do an article on Exxon and say I don't have any positions on it, but nothing stops me from putting on the same kind of performance as with Exxon. Or let me tell you, the one stock I had last week, Halliburton Infrastructure, which I knew, didn't do an article on it, but this is what I bought. So Halliburton did pretty good, really good, in fact, right there, and got some profit here, and sold it a couple days ago before, well, just in the midst of that decline on how oil price is starting to go down. This news was driven by when Saudi and OPEC said we're cutting production. Boom, it goes up. So, but we're hitting peak. So this is a style of trading I could do, and no, Exxon's a good one, and then get out. And even though I've talked it up with Exxon as an example, right now, to be truthful, everything's going down. Everything. As I said, we looked at gold. Same with oil. Same with real estate. Probably you might like that. I'll do it again. Or crypto. The general markets have been down. The only thing that's making money right now is U.S. dollar. So if you hold DXY, yeah, you'd be up about 18%. I call it cash. It is. And there's that. And I ramble on again. So the whole idea is that's the style of trading. But the next step is to find these little companies that do pretty impressive returns, like doubling, from $5 to $10, and they seem to have no um, shortage of that. Like these are early stages of some of these companies, I think, because nobody's talking about them. But, sorry, but who knows what will happen if I do the two articles that I want to work on for these companies and see that article if it impacts price. I don't know. But if you're getting 4,000 people plus from an article I posted yesterday, can you imagine on a little tiny stock with a tiny float and the impact of that? So, but again, I can't own that stock and I won't own that stock. It's called front loading. And that's not just in the eyes of Seeking Alpha, but that would be kind of considered illegal, which you don't want to get into. You don't want to get in the bad books of places like SEC or tax authorities and that sort of thing. So don't do it. So I won't. But I don't see a problem if you're saying, well, Exxon looks good. I'll write an article about that, but I'll get the competition. This one, maybe Chevron, and let my members know what I'm trading. But keeping it honest with Seeking Alpha, and I think that's important because if you know a sector's hot, usually the sector uh, does well. Usually, as an example, if you look at, let me see if I can find it as example, because I do look deep in these. So if you look at U.S. oil infrastructure ETF, and then if I put in the holdings, let me see if um no, you want USA. USA. Boom. And we want PDBC bull. Let's see it here. Sure, one of them will come up. It ain't one of these. Is it a leaderboard? No. Let's see if I can find another one. Uh, Let me see. Okay, you know, I'll just choose iShares is going to be pretty good to showcase this. There it is. So this one, I believe, U.S. oil. It will have its holdings. Inject holdings. So usually in here, if it's an oil specific, oil infrastructure, in my case, what will happen is it will give you the percentage, the weighting, and I'll have both, let's say in my case, Schlumberger and Halliburton. They're direct competitors. Or if I look at oil as another example, I might be able to find it if I do this. Uh, get rid of this. This might pull up one of the ETFs that I come up with. Let's see, one of these. Okay. I'm just a bullet cherries. Uh, oh, these are the big ones. Maybe it might be Invesco. Yeah, I think PDPC was one of them. So if you look at hopefully the holdings, where are you? Distributions documents. Um, let's see here. Fund holdings. I always hide that. I don't know why. See, this is the problem of friggin' ETFs. They hold other ETFs. Sometimes they'll hold future contracts, swaps. I don't know. This is where you got paper holding paper. This is when you hear, well, if there's a meltdown and ETFs meltdown, this is why. I could look forever on it. Let's see. EBO, USO. Yeah, let me try USO. USO. It's not, these didn't come up. Holdings? Yeah. See, these are now contracts. That's all they have. Hmm. Let's see what else we got here. ETN. Uh, which ETF is best? Uh, who- I don't know. I could go on about it. USO. These are the big ones, but these are not generally the best performing. The ones that I've got are Invesco, I think, was one of them. Oil ETF. Seeking Alpha is usually number one. They're pretty aggressive on bringing in the traffic. DBO, that might be one of them. I don't know. I'll try this the last time. I'm gonna shut up. You can always quit. Holdings. Yeah. Again, this is the problem. Now they hold mutual funds and treasury bills. Utter rubbish. This is what I just learned a few days ago that these ETFs hold ETFs. They're trying to maintain their returns to keep the market cap, even though they don't hold anything to do with oil. It's a sham. But that's a lesson to be learned about these things. The other thing is I put up a webinar actually live on that exact topic about um, don't hold ET. I mean, if you're lazy, do ETFs, fine, but you're going to pay commission fees for holding them when you trade them on the entry or exit. So if you want to avoid that, minimize the commission, just look at the holdings, see what the big weightings are. Stock, if it's especially if it's a bullish ETF, do the research, and if that's a good stock, buy it. Usually, what I find is that my stuff lately, because of the crazy whatnot, everything is just dropped. Like a week ago, like the beginning of the week, yeah, oil's good. Now 2 days later, it's just yeah, no good. So now I'm gonna shut up. Thanks for watching. Have a good day. I'm not gonna think anymore, otherwise I'll be on here for another half an hour. But so far, the only thing is I gotta go. How do I patch these two videos together? My challenge